I'm going to be addressing one of the frequent questions I get, which is, how can I create passive income that will sustain me in retirement? In today's video, I'm going to walk you through a complete step-by-step tutorial on how you can build a 12 million naira dividend paying portfolio by the time you retire. Before we dive in, I want to be clear. This 12 million naira in annual dividends is based on the amount of money you invest monthly and the type of dividend paying assets you choose. This video is a complete beginner's tutorial covering the 3 essential steps: what to buy, when to buy, and where to reinvest your dividends. This is specially designed for Nigerians, whether you're living in Nigeria or outside Nigeria. I will show you the exact 3-step system I use, plus the critical mistake that most Nigerian investors make that cost them millions in potential returns. I used to make this mistake, and I'm here to make sure that you don't make it too. For those that want a quick overview, here are the 3 steps. Step 1, buy dividend-paying assets. We are going to be exploring Nigerian stocks, REITs, and international ETFs in this video. 2, use dollar cost averaging. This is where you invest consistently every month, regardless of market conditions and price. 3, reinvest strategically. You choose between automatic reinvestment, manual reallocation, or taking income. For those that are new to investing, when you buy shares in dividend-paying companies, these companies reward you with cash payments every year. Some pay once a year, some pay twice a year, some pay every quarter, and some pay every single month. Many companies, both in Nigeria and in the US, pay out a portion of their profits every year as dividends to their shareholders. This is similar to owning a rental property where you put tenants and collect rental income every year. Dividend stocks work the exact same way. You buy dividend-paying shares and you collect regular payments in form of dividend. Let's quickly get started with step 1, what to buy. Let's start with Nigerian shares. Some of the best paying Nigerian shares include, in the banking sector, we have many of them, including Zenith Bank, GT Bank, Access Bank, Fidelity, UBA, and so many others. Under consumer goods, we have companies like Dangote Cement. In oil and gas, we have companies like Seplat Energy, Total Nigeria, Owando PLC. Moving on to real estate investment trusts, REIT. The best paying REITs in Nigeria are UPDCREIT, Sky Shelter Fund REIT with ticker symbol SFSREIT, UHOMREIT with ticker symbol UNOMREIT. You can also invest internationally using apps like Bamboo, Optimus, Trove. These apps allow you to invest in ETFs like SCHD or VYM. You can also take advantage of global dividend funds for diversification. If you're overwhelmed with these options and need help selecting the right mix for your investment portfolio, I am offering one-on-one consultation sessions where I will help you analyze your current financial situation, create a customized dividend investment strategy for you, help you set up your investment accounts with automation, and develop a long-term wealth building plan for you. Spaces for this session are limited because I work with everyone one-on-one, no group sessions. So rush now and book your slot. I'm going to put the link in the description of this video and also in the comments. Let's go on to step 2, when to buy, using the DCA method, which is the dollar cost averaging method or the naira cost average. The key to building wealth is consistency. So start by setting up recurring investments. Start with what you can afford. Yes, even 10,000 naira monthly is good for a start, but please don't remain there. You will not achieve anything tangible only investing 10,000 naira a month. You can start there, but please work towards increasing it every single month. Use platforms like Bamboo or Optimus for international stocks, Trove for global and local investments, traditional stockbrokers like Cardinal Stone and Stanbic IBTC stockbrokers for Nigerian stocks. Let's say you invest 100,000 naira monthly for 25 years with an annual return of 12%. The Nigerian stock market has done way better than this 12% over the last few years, but let's keep it low for the purpose of this calculation. using a compound interest calculator. Please, when you want to do this kind of calculations, don't just do the normal straight method we were taught in school. You need to use a compound interest formula or a compound interest calculator. Monthly contribution is 100,000 naira. The time period is 25 years. Annual return is 12%. Your final portfolio value will be 170 million. The beautiful thing about this is that your total contributions will be just 30 million. The rest is as a result of compound interest. That is, 140 million will come to you as a result of compound interest. Do you see the power of starting as early as you can and being consistent? Please, if there is anything you get from coming across me and this channel, let it be that you now understand the power of compound interest. I want us to understand this so that we stop giving excuses and start investing. Time and compound interests are your superpowers here. Moving on to step 3, where to reinvest your dividends. Many platforms allow you to reinvest your dividends into the same stock. For example, if Zenith Bank paid you some dividends, the platform will automatically help you to use that dividend to buy more units of Zenith Bank. This is great for hands-off, busy investors. You can also go for option 2, which is manual reallocation. Here, you collect dividends and then manually choose where you want to invest them. You may choose to reinvest in different stocks for diversification, buy more of your best performing shares, or allocate the money to new opportunities. We also have a third option, which is where you take some of these dividends as income. Once your portfolio is large enough, you can start taking your dividends as regular income. This is perfect during retirement and also to use to supplement your other income sources. Let's now talk about the number 1 beginner mistake to avoid when you start investing in dividend-paying shares. Never invest in a stock just because it has a high dividend yield. For example, if you see a stock paying a dividend yield of 15%, don't automatically assume that it is better than the one paying a 5% dividend yield. Here is why. A stock might have a high yield because the stock price has fallen dramatically, the company is in financial trouble, or the dividend is unsustainable. Always check the company fundamentals. Are revenues and profits growing? Dividend sustainability. Can they maintain these payments? Stock price trend. Is the company's value growing over time? Let me go on to show you a real Nigerian example using a formulated example. 30% of your portfolio can go into Nigerian stable companies. Companies like Dangote, MTN, Zenith. 20% can go into Nigerian REITs, some of the ones that I've mentioned earlier in this video. 30% can go into international dividend ETFs, like the ones I mentioned earlier, while 20% can go into growth stocks for capital appreciation. So these growth stocks don't pay you dividends, but they have a higher potential to appreciate in value. With 150,000 naira monthly investments and proper diversification, you can realistically target 12 million naira in annual dividends by the time you retire. This calculation assumes a 10% annual investment growth and 4 to 6% dividend yield. Remember that how old you are and how many years you have before retirement can greatly affect this figure. Do you want to know exactly how much you need to be investing on a monthly basis in order to reach your retirement goal? In my one-on-one sessions, I will calculate your exact numbers and create a personalized timeline for you. How do you get started with what you have learned today? 1. Open investment accounts with platforms like Bamboo, Trove, Cardinal Stone, or Optimus. Start small. Even 10,000 naira monthly is better than waiting. 3. Set up automatic transfers to remove emotional decision making. 4. Research before investing so that you can understand what you're buying. 5. Stay consistent. Wealth building takes time and discipline. Remember that the best time to have started investing was 20 years ago. The second best time is today. Don't let analysis and procrastination stop you from building wealth today. If you found this video helpful, please like, share, and subscribe. And if you have any questions, drop it in the comments. I read and respond to every single one of them. Remember that building wealth through dividends is a marathon and not a sprint. Stay consistent and you will reap the benefit. Watch the video showing on your screen right now for more information on how you can build wealth the right way. Until I see you in my next video, keep dreaming big and keep working hard towards your dreams. I'm rooting for you. Bye for now.